Crafting a state budget will be one of the top priorities for lawmakers when they return in February. It's been complicated by the decline in the amount of money going into the General Revenue Fund, the state's main operating account. Much of the decline is attributed to an increase in mandatory apportionments, including business tax credits and incentives. I spoke with Oklahoma Watch reporter Warren Veith about those tax breaks and what they mean for state government. Warren, what have you learned from the Tax Commission concerning industry tax credits and incentives?
Dick, over the last 4 years, the cost of tax credits and incentive payments that are targeted specifically at businesses and industries has risen to $760 million last year. That's $750 million. That's roughly double what they were 4 years ago.
And how much of that as a percentage of the appropriated budget?
The state budget is about $7 billion, so we're talking about this is roughly 10% of the state budget. It's more money, for example, than we spend every year on prisons and public safety.
So a tenth of the budget is coming off right off the top.
That's correct.
Who's getting these subsidies?
Businesses and industries. The oil and gas industry is by far the biggest beneficiary. They get more than half of these tax breaks. Everybody's heard of the horizontal well credit, but there are 6 or 8 other special credits for 3D seismic wells and ultra-deep wells. But another up-and-comer is the wind power industry. The companies that went out and built these big wind farms now have a tax credit that is costing the state about $50 million a year.
Are there any firm numbers on the benefit and whether these tax credits pay for themselves?
Well, that's a very interesting argument. The supporters of these credits will swear that they pay for themselves, or at least partly pay for themselves, by generating more economic activity, creating jobs, and there's clearly some truth to that. But most mainstream economists would argue that even if they do stimulate a little additional activity and result in some additional employment, they don't come close to recovering the cost to the state in giving up that revenue. And also there's a fairness argument involved. If we begin to pick one category of business and give them a tax break, but don't do the same thing for another category of business, then we've created an unlevel playing field, and we're requiring everyone else to make up the difference.
So whether there are facts and proof, the answer is no.
The answer is probably not much.
All right, probably not much. What credits and incentives are under fire going forward? The wind farm credits?
We just had a humongous battle in the legislature this year over the gross production tax credits for oil and gas wells. That's unlikely to be revisited next year. One tax credit that is in the crosshairs right now is the wind power credit. People might also want to look at the Quality Jobs Program, which writes checks directly to so-called manufacturers, which include the Oklahoma City Thunder, which received $4 million last year for the employment they created.
So are Senator Mike Mazzei and Representative Dave Dank still the leaders in examining these tax credits?
They're two of the leaders. They're not acting alone. Earl Sears in the House is another key figure in all of this, but they're at the forefront.
All right, we'll be watching that, as will you. Warren Veith, reporter for Oklahoma Watch. Thank you.
Thank you, Dick.